plus $39,065 profits. With a weekly gain of almost $40,000, we're going on holiday. With that weekly result, we made a new all-time high, and with that we deserve our holiday and we use it to recreate. Welcome to Insider Week. In this video, I'm going to show to you the trades of this week and the corresponding results. Before I start to discuss our results and show you the trades, I want to warmly invite you to our free webinar, which is going to be held on the coming Tuesday, the 9th of August. Join us at 6:30 p.m. London time and get to know our trading opportunities. We will also answer all your remaining questions towards our coaching program, and if you want to participate, we show to you how we accompany you during the next year. Use the link below this video to register for the webinar on Tuesday. Let's get back on track and start to discuss our trading strategies. Our first strategy is the COT strategy. It is based on COT data, and we derive our buy and sell signals on the weekly chart to enter the markets on the daily chart. First market is orange juice. Here we forecasted that because of the shortage of the orange juice stock, an uptrend is likely. On the daily chart you can see that we used one of our entry patterns to get into the market with our long trade. You can see that the trend continuation on the daily chart took actually place. We closed our position on Friday and made a gain of $4,170. We expect the price to further increase, however, we wanted to close all our positions before we're going on holiday. Next market is palladium. Here you can see that we received a buy signal around the level where we received other buy signals in the past. This strengthens the idea of a support level where the buy signal appeared. On the daily chart you can see that we entered the market on the Thursday's high, and as you can see we exited the market on the close on Friday because we flattened all our positions, and by that the palladium trade delivered a total profit of $3,600 to us. Next market, rough rice. As you can see we received a buy signal, and the buy signal is in the weekly trend direction. We can also see that the trend is synchronizing with the seasonal trend. On the daily chart we can see that there was a deep correction, and after that correction the price started to rise again in harmony with the weekly trend direction. We used another correction to enter the market, and on Friday we closed that position. With that trade we made a total profit of $12,880. Let's have a look at the second COT strategy, the so-called champion strategy. We started into the week with an empty portfolio, and at the end of this week, we closed all our positions as well. Our performance in this week amounts to a total profit of $17,450. Let's have a look at the trades that we used to produce this result. The first market is rough rice. Here, we entered this market and we were stopped out with a loss. As you can see, the price turned around to the upside again. However, we took no re-entry because the trading rules of the strategy haven't simply provided an opportunity to re-enter the market. In corn, we waited for a trend reversal. The trend reversal appeared and we put in the market our entry level. However, we were only triggered on Thursday, and on Friday we already had to close this position due to our holiday. Orange juice is the market that we already discussed in our first COT strategy. The fundamental reasons for the bullish expectation based on the shortage in the stock is the basis for this trade as well. We took the trade in the champion strategy as well, and we made good money with it. And the last market in the champion strategy is the cotton trade. Our entry was triggered on Friday, and on Friday we also closed the trade due to the holiday. Compared to the first COT strategy, the holding period of the champion strategy is shorter anyways. Here, we are usually holding positions for 2 to 5 days, and this would exactly fall into our holiday period. Now let's have a look at our weather trading strategy. Here we combine COT data together with fundamental extreme weather analysis. In this strategy, we not only trade commodity futures, but we also trading commodity stocks and commodity ETFs. The BOIL is such a commodity ETF. It's based on the natural gas price. As you can see, we are very well in the win here. And then the first commodity stock went in the win zone. And then we have a cotton trade that's also in the green area. And the other open positions are the commodity stocks that are in the loss. In total, we made a profit of $965 this week. In rice, we had a profitable trade, as you can see on the chart. The previous trade was not successful. However, the fundamentals were still given, and so we decided to re-enter the market. We took 5 trades in this market, and 4 of these 5 trades were profitable and highly successful. And in total, we made a total profit of $9,065 with this trading idea in rice. In the cotton market, we could see a strong sell-off. We expected this to only be a shock reaction and that the market is going to stabilize. The first trade was a long trade against that sell-off, and the market drew us down a bit. The second trade was plus minus $0, and the third trade is an open position. We are in this market with 2 open contracts, and because we only have that one open position and we can use a trailing stop to manage the risk, we decided to keep that open position. Next market is BOIL, the natural gas ETF. As you can see, we used the correction that appeared in the market to further add on our open position. The reasons are simple. We have a hot summer, a cold winter is expected, and we can see an active tornado season. All these factors are speaking in favor of a bullish natural gas price. And because of that, we added contracts on this trading idea. Our commodity stocks based on the idea on the drought phase in the United States have not shown any significant changes. The first commodity stock, CF, has run into the profit zone. As a result, nothing changes. Finally, let's have a look at the CRB index as usual. That's the commodity price index and a great compass for every professional trader. As you can see, the last week was a sell week. The week before was a buy week and indicated that the end of the correction would have been likely. However, now we can see that there is still much weakness in the market. The end of the correction could likely appear in the middle of August instead. That's it from our side this week. Please take the chance to register for the free webinar on Tuesday. We will talk about our trading strategies and about the trading opportunities to come. So, a valuable insight for you. For that, follow the link below this video. With our trading plan for our members, we are back on the 28th of August. With the trading report here on YouTube, we are back on the 4th of September. Until then, we wish you a great time. Are you going on holiday? Write us in the comments where we would be interested, where other traders are making holiday. Give this video a like and don't forget to subscribe this channel to not miss out when we are back from holiday, recreated with fresh news on our commodity and futures trading based on COT data and our fundamental weather analysis. Until then, we wish you a good time, and if you're trading, please always be aware of the risk, because risk management is the key to success in trading.